Hi guys, this month we were talking all about our programs that we offer at NGR Accounting. We're an accounting firm that's more than just compliance. Today I want to talk about the profit in your business and how we can actually let you have a profit in your business. Let's get onto it. Let's go guys. Okay, so welcome to this week's video where we're talking everything about our program called Profit First. Now, this program is based off the Profit First book. If you want a good read and you're in business, I suggest you go out and get this book. It's by Mike McCallowitz, and no one can spell his name, so he often refers to himself as Mike Motorbike. So, but you'll see that if you read the book. But get the book, have a listen to it. I even suggest actually get the audio book because then you can just listen instead of reading. And that was how I did it. That's how I love doing audiobooks. But if you've been one of my clients and you've come in and done an advisory session with me, you know that I absolutely love my whiteboard. This is pretty close to a whiteboard, but and we're going to talk about everything Profit First. So it's going to be very interactive today. First one of my videos, and I'm surprised that it's taken me so long to get to the point where I've got pen and paper out. So I want to talk to you about, I guess, about your business and how we can turn it around to actually making money. Typically speaking, when we talk about business like accounting profit, we always sort of go, the accounting equation is revenue less expenses equals profit. And, you know, that makes logical sense. That's what I've learned in uni. That's what we all learn in business, that we think about revenue, then we look at the expenses. And what we do is we're putting profit, we're putting it last. Why do we put it last? That doesn't make sense. It makes absolutely no sense. So, but as human nature, human nature basically says when you put something last, it's insignificant. And when we do this in business, we always put profit last. And why is that? Well, you think about if something comes last, it's not meaningful to you. It doesn't mean anything. It's left to the end. No one. If you think about the Olympics, someone who came last, do you ever remember them? Do you remember? If we go to a swimming competition, someone came last. Well, who cares? So that doesn't really work in business, does it? So I think that's the first thing we've got to change. We've got to start thinking about how we can make profit. Number one, the first thing we start thinking about. I guess the other thing as well is, before we go on to my next page, is if you've had a heart attack and you've left the hospital, are you going to leave the hospital and say, hey, I'm going to put my health last? No, you're going to put your health first. So let's think about that as a metaphor for when we're thinking about our profit. So that then gets onto the new equation that I want to look at, called the Profit First equation, where we're looking at revenue and then we're taking away our profit. So we're putting profit first, right? It's number one. And we have expenses. But let me just backtrack a little bit. I had a client that we recently did some work for, and he had a fantastic profit in his business. He had a profit of $70,000. And he said to us, he said where's that $70,000 gone? And it's we've gone, hey, look, we've gone in this meeting, going, yeah, you've made a profit. Man, I'm so excited for you. You made a profit. And he's like, yeah, I did. Where'd it go? And typically, and I've done this for years as well. You spend it. No, I didn't. That profit doesn't make sense. I didn't make a profit of $70,000. At the end of the financial year, I had $20,000 in my bank. Well, yeah, okay, you did. But the reality is that $70,000 is an accounting profit, and you spent it. You spent it on paying off liabilities. You spent it, paying the ATO. I guess what this Profit First system equation is that I'm going to go through with you is a system where we're going to talk about cold hard cash profit that you can spend in your business. You're going to physically see it. So how are we going to do that? Well, the first thing we're going to do is, if we think about the heart attack, right? We're going to put your health first. We're actually going to, in your business, put your profit first. So we're going to start thinking about the profit as being number one. Number one in your goal. So let's see, how does this really work? Well, it works because it's a behavioural-based cash management system. Profit First enables you to instantly measure your financial health and take action by simply looking at bank balance. So what we're going to do is, and I'm going to go to the next page here, is we start actually looking at what's in your bank account. And this is what a lot of people do. And in business, you've probably done this yourself. You don't ever go first up to zero and look at your profit and loss and see what revenue you've had for the month or what expenses you got. And look, you know what? I'm probably a little bit ashamed to say it, but I've done it as well. I just go straight to my ANZ app, who I bank with, and I've gone, yeah, oh, there's that's the cash in there. Oh, I'm doing all right. But then you have wages come out. You have super at the end of the quarter. You have your BAS to pay. And all that money is suddenly gone. And because the harsh reality is that money, whether, you know, if I pull out a figure and say it was $100,000, wasn't all your money. You paid off your wages, you paid your super liability, you paid your GST, you paid your expenses as well that you've had, your creditors, and you're left with $10,000. You know what? It looked so much better when it was $100,000. But now you've only got 10. And the harsh reality is, you've probably actually spent more money on various parts of your business that you shouldn't have because you didn't have the cash. So what is Profit First? It's a system whereby we basically use what's in your bank accounts to determine where the money goes. So if we look at, for example, you know, you've got your revenue, you've got, typically what we do is, in this system, is we open up bank accounts, right? And we have 5 bank accounts. One bank account which is for revenue, which is where all your turnover comes in. The next one is, and this is number one, this is important as well, it's a profit account, right? So we start allocating profit to a bank account. Start also owner's pay. Owner's pay is actually a really, really funny one. How many of you out there are like working probably silly hours, like you are the number one employee in this business, and yet you are the employee who's actually paid the least out of everyone? Why is that? You're the number one employee, and you're not even paying yourself a market rate. So we start looking at that too, how we can get you to pay yourself what you're worth, as if you were an employee of that same business, right? The next thing as well is, well, tax, GST, right? They're liabilities you have to pay. You don't want to be in a position where you have to go do a voluntary liquidation and have to wrap up your company because you spent all the money that was there for GST. Same deal, operational expenses. You know, like if you're in business, there are going to be expenses. If you don't pay your expenses for whatever it is, whether it's accounting fees, suppliers, you know, insurance, whatever, if you don't pay those, well, you're not going to operate to get this revenue up here, right? And once again, if you don't pay these things, eventually what will happen is you'll go into voluntary administration, something you don't ever want to do because it's a horrible smell that's going to be around for the rest of your life. So yeah, typically what we do is, okay, so we kind of go, well, right, we've got, you know, revenue here of $1 million, right? Let's just say this is for the whole year, right? We would sort of look at this on a fortnightly period, and we're going to go, well, all right, what we're going to do is we're going to allocate of that $1 million, say 10% to profit, all right? And then the next thing is, well, you're the owner, you're the number one, so we want to pay you a decent salary, 35%. And then let's say that tax and GST is 15%, right? And then your operational expenses is the difference. Now you're probably all sitting at home going, does that add up? It certainly does, to 100. I did calculate that before I started today. So if we were to look at that $1 million and we'll break it up, well, you know, we're saying, well, okay, we're going to put $100,000 in profit, and then, you know, $350 to owner's pay, and of that, tax is $150,000, and then your operational expenses being $400. Now, what happens is, if you got to break this down on a week-to-week basis, I mean, this is for assuming revenue over a whole year. But, on a week-to-week basis, obviously the numbers would be a whole lot smaller if you divide it by, say, 48, assuming 4 weeks, you don't operate. But if you look at that and you go, well, week-to-week, you'd want to make sure that, whatever's in this account is actually going to cover your expenses. If you find you're in a position where you're starting to spend more than, $400,000, well, that is therefore then eating into this here and that there, right? And potentially you're earning less, or it could even be that then you're still taking your salary, but then you're not paying your suppliers or paying your super. And I can tell you as an accountant, I'd say that there is a huge percentage, not our clients, but definitely, like, if you look at the statistics with the ATO, and even speaking to liquidators that I know, like Darren Vardy and Liam Bailey, that the number one expense creditor that is never paid is employer super. So, and tax. And the other thing as well is that if you're not paying that as well, as a director, you start to also become personally liable to pay those debts. So if you go voluntary administration, you're still liable for that, right? So, you just can't hide underneath your corporate banner, your corporate company structure and go, well, I'm not going to pay that, right? So, so that's the profit system work. So I guess the reason why this works as well is, apart from what I just said there, is it comes under what the system called Parkinson's law, which is, I think it was like I don't know if I'm going to state the period of time when he came up with this theory, but basically he looks at the human behaviour of supply and demand, right? And what typically happens is, if we look at, we've got dollars down here and we've got supply and you've got demand. So, if your dollars here was, say, 100,000, well, you're going to spend at that point then, this is supply, you're going to spend a whole lot more. But if we actually pull that supply down, right, and said, well, right, the new supply line is here, and this is, say, for example, this supply is for your operational account, well, that means that then, therefore, you've only got, based on your revenue, this amount of money to spend. So it's like, if you think about, if you've ever been to an all-you-can-eat restaurant, right? What they tend to do is they give you not the same plate you have at home, not a huge plate like that. They tend to be smaller plates, so you can't pile on as much, which means you can't eat as much. You can always go back, but there's less that you can put on. Same thing, if you had a jar of cookies. If you put 15 in front of me, because I really like cookies and the best cookies in the world, well, I'm going to eat 15 of them. But if you only put 2 cookies in front of me, well, I'm only going to eat 2, because it's only what I have to eat. And the same thing with this profit first system here. So if we go back here to my previous page, what starts happening, right, is we've only got $400,000 to spend. So what happens there is, if I'm spending more than $400,000, you start looking at this turnover here, and you start asking questions. And is this high enough? Are you charging enough? And it leads to another issue. Really, and this is what's so great about this program. It starts identifying issues, problems in your business. So, for example, we've done a video earlier with Michael DeHaan from Care to Grow, where we talked about money mindset, right? So, are you undercharging? Are you undervaluing yourself? So this profits first system is actually going to identify that problem, whereas in a typical P&L, profit and loss, where we put the expenses last, the profit last, we're not going to really see that. It's because you're not going to feel it. Right? You can see it on pen and paper, black and white, but it doesn't mean as much. But I tell you, when you've got no money there to pay your expenses, you're not earning enough, you're going to personally feel that, because you can see that you're doing what they call cash accounting. You're going to your bank, opening the app, and you're seeing what cash you got. What it also identifies then is, well, you know, are the expenses then, you know, are these too high as well? So do I need to start looking at what I'm spending my money on? You know, is there better deals out there? Can we negotiate and do better for ourselves? And then ultimately what happens in the end, right, is that this here actually becomes a reality in your business. And for a lot of people in business, and there's a lot of people in business, they don't see a profit in their business. They tend to see losses or just breaking even. And particularly as well, paying yourself less than what you'd get if you had a job. So I guess this is what I'm going to put to you guys here if you're watching this video. A, if you resonate with what I've said here in this video today, reach out to us. Get into our Profit First program. We want you there. We want to help you. We want to eliminate SME poverty, because I am sick and tired of seeing people not earning what they're worth. Second thing is, once again, this resonates with you. Get in touch with us. We want to help you. So, best way to get in touch is by going to ngraccounting.com.au. We'll do what we call a Profit First analysis. We've got a special tool to look at that, and we can, you know, basically have a look at your Xero file, whatever system you do use, whether it's MYOB or Quicken, and we can then pull out and see where you're, you know, making mistakes in this system. I really do encourage you, and what I'd also suggest as well is that don't feel ashamed in what's in your business. It's about you making a change for your livelihood, for your family, and also to, you know, earn what you're worth. Now, if you can't do that, probably the thing you want to sort of talk about is, well, you know, is business right for me? But in saying that as well, I wouldn't go down that path, but we've got some really good connections, really good people that we can connect you with to help you along this journey. So that's our Profit First program. I really do encourage you to come along and to reach out to us, and we can definitely solve your SME poverty in your business and get you a market salary for what you're worth by implementing this system. All right, well, thank you for watching, guys, and I hope you enjoyed the video. Don't forget to subscribe to our video, and also, if you loved what we've presented today, like it away. Okay, thanks, guys. Bye.